So let's jump into tales from the trading desk, and we're digging one up from uh, one of your past pieces, right?
Posts. Yeah, my
Posts, yeah.
posts. So it's actually damn. I wish I traded that. And it's I used to have this series that I would write, and it was actually inspired from a musician that was a disc jockey on a Toronto radio station, and he would have a story where he would tell a story, mention a song and tell the story of the song, and then he'd finish it with "Damn, I wish I wrote that." So I made "Damn, I wish I traded that," and let's go back to 1987.
Yeah.
And everyone knows George Soros now, but back then he was hardly somebody that the average Joe would know about. It was only he was an elite trader in that basically unknown except to the few that traded with the hedge funds. But he still traded in size. And one of the things was, as 87 rolled around, he became convinced that there was going to be a crash in the stock market. The trouble is that he thought the crash was going to emanate out of Japan.
Wow.
And so he went out and he put on a monster short Nikkei, long S&P futures position. So think about that. In 87,
Wow.
he straps that on, and
Because
everything's
the
looking
Nikkei didn't really blow out until in '89.
89. You're absolutely right. So if you look at it, the Nikkei outperformed the S&P huge. But the interesting part about it was when the 87 crash came along, you can see, we'll pull up this chart of the 5-minute chart. You can see how violent the move was. Most people think about it and they think, oh, it wasn't that bad. But you'll see that the Friday, the contract was down 5%. And I remember reading stories of people saying that they were celebrating because they thought that the long-awaited correction was over. And then come Monday morning, it gapped down. And at that point, it was looking a little scary.
Right.
But the real pain was still to come. So Friday, it had started the day at 300. It closed at 280. This is the S&P 500. On Monday, it gaps down to 270 and then closes the day at 200.
Wow.
Think about that. So that's like a monster.
So just add zeros on that to put in today's perspective. 2,700 down to 2,000.
You're absolutely right.
Right. Like
You're absolutely right because
like it would be like the equivalent of a 700-point S&P crash in one day. One day.
Yeah.
Unbelievable.
And then what happened was it bounced and it gapped higher and then made another new low. But then it finished kind of unchanged. Wednesday, things improved. It gapped higher. It closed. It grinded its way back up. And it opened on Wednesday. It was at 260. And this is where the story of George Soros comes into play. Because on that Thursday, he's having trouble making margin calls.
He's a high roller.
He's a high roller. Because don't forget as well that back then,
Paul Tudor Jones style, right?
No, but they were 5-day settlement.
Okay, yeah.
So I'm going to read you a little bit of this book that I love. I found this book when I was a teenager. It's called Black Monday by Tim Metz, and I just love it. Anyways, it was one of the stories that he's told in there. It was from a Chicago trader that had a ringside seat for the S&P pit. Right. Anyway, so he says, I'm just going to kind of paraphrase a few bunch here. It's October 22nd, 1987, the Chicago Mercantile Exchange floor at 9:30 a.m. So he says, the word is spread everywhere at the CME this morning that Shearson, Lehman Brothers, plans to sell thousands of cars on today's opening. They call them cars at the CME, but it's really those are contracts, okay? Scott Surfling, which is basically the author or the trader in the author's story, almost stayed too long in his upstairs office and needed to run down to the elevator to make the trading desk on time. But he is here now, and today's opening will be burned in his memory. Shearson's floor broker offered 6,000 cars on the opening. Nobody would say anything. Finally, he got a bid of 198, down 60 points from Wednesday's close, and he took it. Then he sold 8,000 more cars in the first minute of trading. It had cost them $300 million to do that. And then in another minute and a half, the price was back up to $230. Okay.
Wow.
Apparently, it became known in the pit that there was a large customer order to sell several thousand contracts. And given the uncertainty in the market, many of the locals backed away. However, beginning suddenly at 9:30, the futures began to rally sharply, reaching the 230 level within 3 minutes. Approximately 2 hours later, the S&P 500 futures were back above 250. It was an instant 24% decline, followed by a 28% rally in 2 hours. Goldman Sachs bought some of the contracts at the opening. Bob Rubin, the firm's top trading official, will confirm. So did Shearson, acting for its own account, another official will confirm. I was mad as hell when I found out it was one of our own customer sales, he would add. The seller was high-stakes Wall Street investor George Soros. You ought to talk to George about that trade if he'll talk to you, Rubin suggested. But attempts to reach Soros will be unavailing. The incredible bust will be a miracle that changes the life of one of Sterling's colleagues, who on Wednesday mistakenly neglected to close out a short position of 25 cars. The mistake could have been a disaster if the market had opened sharply higher. Instead, the price break caused by Shearson's selling will let him buy the 25 contracts he needs at less than 200, giving him a profit of 700 to 800 grand. I only knew him by the badge number, and he wouldn't talk about it. He just walked out of the pit, sold his seat, and he hasn't been seen back on the floor since that day.
Thank you, George Soros, right?
Yeah.
We talk about him and his famous, breaking the Bank of England, but you know what? It comes around, goes around. A big trader can take a hit just as easily as he can walk away with $1 billion, right?
Yeah, it's crazy. And it's just it's a really interesting story. And there's like a lot of people, if you talk to them, if they were at the S&P pit at that time, that is a very famous kind of opening. And it was probably one of the most dramatic and mispriced openings in the history of the S&P 500.
Right.
And Soros had his face ripped off.
Ripped off is an understatement.
Yeah.
All right. Well, thanks for sharing that, Kev. All right. It's time to move on.